Good afternoon, Facebook. We are just going to be going over some bookkeeping. We're going to be going over the PDT prison breakout plan. And what I mean by that is strategy. We're going to be going over the strategies that we use to get over this, get out of this PDT prison breakout status. First things first is this main concept is about, this main course right now is about bookkeeping and keeping track of your trades and things of that nature. So when you're trading, let's start with why I do that. Jesse Livermore, when he was trading, he said that bookkeeping was like the biggest secret to his success, and he would actually, at the end of the year, lock himself in the Chase Manhattan Bank vault, and or one of those big banks in Manhattan. He would lock himself in the vault with all his money, surrounded by hundreds of millions of dollars, and he would go over, back then, this is in like the 1930s, he would go over the ticker tape and all his trades and everything, and you could, he would see how that would affect him. I don't like how this is like sounding. But anyway, so he would go over that, and he would sit with his money, and they would lock him in the vault for the entire weekend. And he would just sit with his money. He would do his numbers. He would eat on top of his money. We're talking about hundreds of millions, which is like billions today. That's back in the 1930s. So bookkeeping is extraordinarily important. And it tells you so much. If you just get in and out of the market every day, that's the same thing as getting in and out of any trade any day. Without a strategy, you are going to be destroyed in this market. So as you know, I've asked everybody to download TraderView. Not download, just sign up. They have a free version, or you can pay for a silver version if you are trading options, which I don't suggest trading options anyway in the beginning. But let's real quick, I want to do a quick recap of our strategy. So can we go ahead and do that? And then we're going to go back in. We're going to do bookkeeping. We're going to see how we screwed up the strategy, or how we kept the strategy, or what we could have done to improve, our ability to stick to the strategy better. See, when you make a mistake, there's three reasons. Okay. There's really two reasons. Okay. So mistake number one is you just totally didn't go on the strategy at all. You just totally said, forget the strategy. I'm going to go do whatever. That's mistake number one. Number two is you didn't exercise the strategy properly. What do I mean by that? That can mean something like, okay, I did everything. I stuck to the 5-finger strategy. I found the kicker, and I got out, and well, the stock ended up going back up, and well, what'd you do wrong? Well, you didn't take a partial, There's things that you might have not just exercised the strategy properly. And then there's the rare occurrences of like technical. And what I mean by technical is, for example, people get stuck in Robinhood trades. I hear that people get stuck in Robinhood trades because the trade will have been tradable, and then Robinhood will put it on a restriction list, and then you're stuck in the trade, and then that's like a technical thing. That's nothing you could do. Or your internet went down in the middle of trading. And that's nothing that there's nothing you could do to help that, or computer issues and things like that. That's very rare. But it's something that's very important. If your internet or your computer is slowing down your trading process, you need to get a new computer. You need to fix your internet. So that's like the third one. But the main one is you didn't stick to the strategy, or you didn't do the strategy properly. And we're going to go over that. And so what is the strategy? There it is. Okay. It happens to be here. Now, would you look at that? Save some time. Okay. So yes, at the top, you can see when we started this, we did a poll, and the average account balance was about $2,500. Now, if you trade that in a PDT margin account or Robinhood Gold or whatever, I suggest trading in PD Ameritrade. So you can use Thinkorswim and all that. Thinkorswim, and you know, they really do. They will. That's how it's staying. Okay. But yeah, I suggest TD Ameritrade, 2 accounts. They'll give you 2 accounts. You say, I want 1 margin and I want 1 cash. And they might give you a hard time, but they shouldn't, because if a rich person calls up and says, I want one, you know, I need a margin account for my millions and a cash account, but they don't give them a problem. So I don't care what you're putting in your account, because they're going to ask you and they're going to be biased, and you're going to say, oh, well, you know, I'm putting in whatever it is, 5,000. They're going to be like, oh, you need 2 accounts for 5,000. Yes, I need 2 accounts for 5,000. So don't let them give you no slack, because I heard that they gave a couple of people a hard time. You are entitled to a cash account and a margin account to exercise your strategy. Okay, so 2 accounts. 1 cash, 1 margin. Now, I had put the money in the margin account on Friday, which is something that was the first time since we've done this PDT breakout challenge that I've put the cash in the margin account. And that was because on the week we were slacking, and I wanted to be able to make multiple trades on Friday. Anyway, to play some catch up, you know, 1 trade, you know, if it was bad, then I would have had a bad week. So that's why the margin account can come in handy, because you'll always have that 3 trades that you can make if ever you have to dig yourself out of a hole. Are you sure that this volume is okay here? Seems like I'm coming on too loud. All right. So here's the 5-finger strategy. So first of all, we're starting with, you don't have to start with 2,500. You can start with 5,000, 10,000, whatever you want. I just don't suggest you bet the whole house if you're new. You know, throw 5,000 in there, throw 4,000, throw 3,000, 10,000. If you've been trading for a while, sure. Because technically you're supposed to start in a paper trading account, and then once you're profitable on that, then you can go to cash. Depends on how much you care about the principal. If 2,500 is going to hurt the family, then don't bet 2,500 and trade in paper. But okay. So 2 accounts, 1 cash, 1 margin, TD Ameritrade. Thinkorswim, you're going to have to download as well. How did that happen? Oh, there was more stuff up there? That's a different strategy. Forget that for now. So the 5-finger strategy, okay? So we're looking for stocks between 90 cents and $12. We want them to be up more than 15% in the pre-market. We want the float. Now, also, it could be up more than 15% in the pre-market or right at the open. Sometimes there'll be stocks that are quiet in the pre-market but take off at the open. The float, you want the shares to be below 40 million, preferably less than 20 million is better. And you want high volume, preferably the volume to be 1/10 of the float. Up on earnings or news. And then the kicker is anything that makes it stand out. Example, it's about to break a 52-week high. It's up on earnings. It's hitting a pivotal point. It's technical formation, says it's at a cup and handle, and it's at a 52-week high. Just look for kickers. We'll go over that. That's something separate. All right, so now let's go over bookkeeping. All right, let's see. Now that we got the strategy down, we know what we need to do. And one thing missing from that strategy is entries and exits. And I just want to go back just for that. We are big on partials. Okay, partials. Exclamation point. What are partials? That means if you're deciding on exiting a stock, unless the stock is showing you the red candle of death and as if it's collapsing and giving up, we take partials. So if a stock, for example, can't show you that, but if a stock, for example, is doing well, and then you say, well, I'm going to get out here, don't get all the way out. You take a partial. You get most of the way out. like 3/4 of the way. So if you have 400 shares, sell 300, hold the last 100, and see if the stock goes any higher. All right, so let's move on. So partials are very important. Sell off slowly, or if you're paying commission, sell off 3/4 and wait for the other 3/4 what to do. All right, now's when we're getting into bookkeeping. So this is really what all the juice was about. Now, if you guys have any questions on Webinauto, you can ask me. First thing first, I want you to get yourself a good old plain old notebook. You can see I have a whole bunch of stuff in this notebook, Post-its, everything. So now for the PDT challenge, I'm going to start from the back. Actually, I already have stuff in the back, but I'm going to start from the back, and this is where I'm going to keep certain things, but we'll get into that later. For now, Trader View is what I want you to have. So screen sharing, Trader View. This is Trader View. Shows you right here. This is the dashboard. I'm confused as to what this thing is. Non-options trades. Yeah. So let's see here. Let's go to reports view. See, you don't know necessarily so much need the paper book now that they have a journal account. So this is our PDT Prison Breakout account. Okay. And as you can see, for the most part, we're doing well. We had a little pullback this week, so to speak, but last week was a 4-day week, and we finished at $703 last week. Last week was a very good week. This week, not so much. Started at 703 and ended at 826. So up about 5% on the week, which is okay because the previous week we did really well. And as long as we're making 10 to 20% a week, we'll be out of PDT prison within 13 to 20 weeks. So that's another thing there. The PDT prison breakout strategy is ... We have to make 10 to 20% a week. That's compounded. Okay, keep in mind that that's compounded. So in other words, 10 to 20% a week. If you make 2% Monday, Tuesday, Wednesday, Thursday, Friday, that's not 10%. It's actually like 11.5% because interest compounds. So that's 10 to 20% a week of compounded interest, and which is 2 to 4% a day. So we have to meet these standards. Now, if we do, we'll be out in 13 to 20 weeks. We'll be at $25,000. Starting with $2,500. So that's basically it. That's the PDT prison breakout strategy. We want to try to average 2 to 4% a day, not dollars a day, percent a day, and have our compounded interest come to 10 to 20% a week. And I'll show you how to calculate compounded interest. And that will bring us within 13 to 20 weeks. If we could stay more towards the 20 side, it'll be 13 weeks. It'll bring us from 25,000 to 2,500 to 25,000. So that is 1,000%. All right, beautiful. So now that we got that down, let's get into the bookkeeping. This week, let's go. Let's really start with last week and see the stocks that we picked. So you go to TradesView and it'll tell you blah 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 blah. So we played Riot our first day, and let's check it out. It shows you everything you did too. This is pretty cool. It shows you on a graph where you entered, where you exited. Oh, detail. All right. So, we not only played Riot Equity, we played Riot Options. And beautiful, beautiful. So this is the 5-minute chart, and it appears, you can see that this is where we bought in. It shows you right here. We bought in right here. I guess this is options, huh? Running P&L. Price actions. So it shows you our entries and our exits, and our entry just below the tops. So that's a pretty good play. We did well on this one from what I understand. Let me go back to TradesView. Clear. So on that day, and we also traded UVXY. So that day is kind of far back for me to remember, to be honest. But from what I can understand and from looking at the chart, it appears as though we did everything perfectly from what I can remember. This is a little while back. We entered, we exited with a partial for a profit, and then we sold the remaining partial for a small profit. And then we took some options as well, and it appears bought 2 at 33, sold at 30, so that was a little loss. Bought 1 at 54, sold at 62, so that was a gain. Bought 1 at 65, sold at 66, so that was a little bit of a loss. But overall, that day is a little hard to read because it's not too fresh in my memory. We're supposed to do this every week. So what I'm going to do is I'm going to just jump ahead. Whatever happened last week happened last week. Let's jump ahead to this week because my memory is not that good. And that would be us starting on Monday. Monday, it appears we made $68 plus 30. So we made $68 plus we made an extra 30 on Roku. So we made about $98 on Monday. Let me just make sure that's right. Reports view. Yeah, $98 we made on Monday. So that is correct. So now let's jump into Monday and see what we could have done, if there's anything we could have done better. So average daily loss, average daily gain, largest loss. I'm trying to figure out, back then, at that point, I want you to keep in mind, on Monday, our average daily gain was about 163 because we had not had any losses yet. So if it was 163, right? So that means that if we're using a 5-to-1 P&L, 5-to-1 win to loss ratio, that we should not be willing to accept more than a $32 loss. Now, I just want to go back to Monday real quick and check it out. TradesView. So Monday, we entered in IGCC, which this was funny because we thought IGCC was IGC, but I don't know what happened with that. That whole thing is confusing. So it tells you here our entry and our exits. You can see we entered at about 260, exited at about, no, I'm sorry, we entered at about 253, and we sold. We took a partial. We sold most of our shares, 80% of our shares at 275. So we went for about the quarter gain, and then I actually added to the position another 100 shares at 275. I guess I thought it was going to take off again, and it didn't, and sold the remainder at 256, which is just above entry level. So you never want to sell your partial below entry level, because then it brings your profit down. So, I mean, from what I could tell and what I can remember, this was exercised pretty well. Maybe could have held you could see, I guess, it dropped, and I didn't take no risk. I got out at around my entry level, which is the right thing to do. And then you could see it actually took off a little more. So we could have held this one a little longer, made a little longer profit. But when I pull back and I look at the chart, I can see I did what is part of my strategy. You never let your partial run below your entry price. So I guess that's what I did. I got out right before it could run below my entry price, and then it took off. So it could have made a bunch more on that, but coulda, woulda, shoulda, but didn't. I would say in the future. So looking at something like this, how can I improve, right? What can I do to improve when I look at this again? What could I have done to improve? Well, since, I don't want to get out below my entry, all I had to do was put a stop loss 1 cent below my entry price. If I would have done that, from what I can tell from reading the chart here, it never would have filled, and my partial would have went off to space. So we're going to keep that in mind. This is a good example. I'm glad this came up. It was executed profitably, but could have been way more profitably if, again, I kept a stop loss at my entry level. So for the main part, I got it at 253, took most of my profit at 274. That's great. I took about a quarter, or about 20 cents. Added to my partial, and let's see. See, the interesting thing is when I added, see, this is a little different, because when I added to my position, my partial, and I averaged down. So technically I did the right thing at this point, because when I added shares, my average price actually became the middle of 253 and 275. So at that point, I was actually probably below the price, my share price. It's kind of hard to explain. I think if you've been doing this for a while, you know what I mean. But just, for educational purposes, had I had not added, the smart thing I could have done would have been to put, okay, you don't want to lose, any money, so put your stop loss at your entry point. You already made a bunch of money from selling this in the beginning, those 400 shares, but you don't want to lose any on the partial. So you can always put a stop loss at your entry point so that your partial never loses you money. All right. Now that we got that, what was the other one on this date? I think it was, nope. Roku. What did I do? I probably bought a couple Roku options here. Let's check it out. I'm not going to go too much into the options because, bought some Roku options down here, sold up here. I mean, looks pretty good to me, It's a good play. But I don't really want to get into Roku. And by the way, do you guys notice the formation here? Can you see the formation I see? I happen to exit right before a head and shoulders. So anyway, yeah, if you can see the head and shoulders there, the whoop, 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 which always points to a downtrend. But from what I could tell, that was executed well. And bought it at 345, sold it at 375. So, all right, that's Monday. Let's move to Tuesday. So the only thing I seen that I did wrong on Monday, which doesn't really count, I can't really say I did anything wrong because I added to the position. What I did do wrong was I know my average balance averaged out at about 260. I might have gotten out a little late on that IGCC, but let's move to the next day, Tuesday. We bought 800 shares of FTNW for a $44 profit. And that's the only play on Tuesday. Interesting. Oh, and by the way, I want to go back because I want you to see something here. So we're going to go back into that IGCC, and we're going to go. There's two mistakes I saw, actually, and I'm going to go back. IGCC, the mistake that I saw is, as I explained, I added to the position, and it looks like I must have sold my partial plus its add for a little bit of a loss. So I'm going to add notes here, and I'm going to say error, sold partial and added shares below average purchase price. Now, and I also should not have added shares at that point. So I'll add that in. There was no reason really to add shares at that point, and I'm not sure what my logic was or what I was thinking at that time, but I should not have added shares. Had I had not added those shares, I would have had my stop loss at my entry point. I would have never gotten stopped out, and I could have rode this thing all the way up into 320. But it looks like it took all day to do that, so I don't think I actually would have waited that long. Should not have added at that price. All right, so I'm just adding into my journal notes, save, and that's that. So I'm going to go back and even clear with Roku. I seen, even though it looks like it was perfect entry and perfect exit, I seen a mistake there now that I'm recapping. Roku right here. That's this one. Okay. So yeah, I got out right below the head and shoulders, but what do you see here? Usually when you see a candle like this, that's the beginning of a bull flag. What usually happens after a bull flag? Usually it takes off. So yeah, I see it. It shot up and I got excited and then I was like, okay, boom, let me sell it. There was probably a lot of volatility at this point. You got to factor in the Vega. That's why, options is a little hard. The volatility was probably so high. I think if I remember correctly, I had put a really high target and I got filled. So I didn't actually sell. I got filled. Because candles like this will make options shoot up in price like you wouldn't believe. So, but what I should have done if my limit order didn't get filled is I would have wanted to wait to see if this bull flag formation played out and it shot up. But I'm not really going to add because I don't remember what happened. That's why it's good to, even at the end of the day, you don't have to do it at the end of the week. At the end of the day is best because you're most fresh and you remember the day more. You remember the day better. So that being said, that's clear. Let's move on to Tuesday. And I traded this one here. I'm excited to see this one. Details. Because I think if I remember correctly, this one, oh no. This one, I entered in 400 shares at $3.94. I sold, took my bigger partial, 3/4 of my shares at $4.13. And I sold the remaining right there. There's the mistake. I sold the remaining shares of my partial at $3.81. So that ate into my profit a little bit. This probably would have been about a $60 win as opposed to a $44 win if I didn't do that. But you can look and see that the stock itself was a dub. I entered here, I got out here, and I sold the remaining part of my partial for a loss. Should have had a stop loss at my partial level. So I'm going to add that to the notes, is should have had a stop loss. Should have placed stop loss at entry on partial. And by the way, for the most part, we keep our stop losses at our entries because we trade breakouts. So when I get to something like that, I'll explain it. This turned out to be a terrible stock. It popped off. It broke up over 4. I guess we were looking for the $4 breakout, but it turned out to be a terrible stock. Yeah, this will be on Facebook. I think it's on Facebook now. So if it's on Facebook, yeah, looks good. Now, so where was I? Yeah, this turned out to be a terrible stock, but we still were able to pull some profit out of it. It just dumped. And as you can see, if you look at the daily chart or the yearly chart, I guess this is a 6-month or a 4-month, it looks like. That's unusual. It's like a 4-month chart. The trend is your friend. This is just a terrible stock altogether. I don't know why it was popping. I'm assuming earnings or something, but execution-wise, it looks like this one actually shot up all the way almost to 440. So another thing that I could have done is I should have tried to catch it at the highs. Maybe, this all happened so quick. I remember this stock. This was a 1-minute candle. These are 5-minute candles, but I could even show you 1-minute candles. There was one 1-minute candle that shot up. That's it. So actually being able to manage to get out within that time frame is pretty impressive. So I'm not going to critique myself too much on this one. The only thing that would have been nice is if I would have had a limit order, maybe at 440. But how would I have known that this was going to hit 440? So there's really nothing I could have done. The only thing I should have done is had my stop loss at my entry point. So that's it. That's the only thing I see wrong here. All right, good. Now we get to go into the red days. Trades view, right? Or you can even go reports view. Reports view is better because you can click on the day, right? Instead of doing it that way. Okay, this is a beautiful thing. This is a beautiful thing that we're going to get to. See, we're going over day by day. So we're winning. Our winning days are 77.8%. Our losing days are 22.2%. And we'll probably stay at about that. Maybe not. But total gain, total loss. So our total gain right now is bigger than our total loss. That's always good. And this is not accurate because we're up almost 800 in the account. So total gain / loss. right, beautiful. Now, win-loss ratio, trade expectation. This is all great stuff to go over. All right, so the most important thing here. So one thing we have in our favor is that we have more winning days than losing days. So we're picking our stocks well. Although I don't think that this is accurate, as a matter of fact, I know it's not accurate. Something's not right here. Detailed view. Largest gain. Total gain and losses, yes. $826. Largest gain, largest loss is 124. Average daily gain, P&L, on average, we're getting $91 a day. That's what we're making. Average winning trade is $88. Average losing trade. Okay, beautiful. I don't know why that was so inaccurate, but maybe I have a filter on there. This is very important. Our average winning trade is 88. Our average losing trade is 57. That is terrible. That is horrible. Horrible. That needs to be corrected. It's not so much that our average winning trade is 88. That's okay for our account size because that's actually like 88 is where it falls in line within the 2 to 4% that we're trying to make a day. So it's actually above that. It's above that. So it's 88 divided by 25. It's about 3.5%. So it's in line. So on average, we are winning 75% of the time, losing 25% of the time. That's pretty good as well. Our total loss average is 236. Our total win average is 1,058. Those are all great numbers, but there's always room for improvement, and that's what we're doing here. We need to decrease our losing trade size. So that's why we're going over the day by day. We should have done this in the beginning, is go over this. You know, we have our market behavior. We're obviously beating the S&P 500. We're doing like 10% a week. We have to actually calculate that. We're doing 10 to 20% a week. So we're in line. This is one of my favorites, instrument. Doesn't really serve any good purpose, but shows you here your biggest winners and your biggest losers is JD, MTP, and CAR. Now, where does it have? There's one that tells you by day, price, days, times. That's it. It'll tell you your best day, your worst day. Now, look at this. This is interesting. So Thursday is our best day. Friday is our second best day. Monday is our third best day. Tuesday is our fourth best day. And Wednesday is actually a losing day. Only by $8, but so we'll turn that around next week unless we lose on Tuesday. And it tells us our average winning times and everything like that. But for the most part, everything looks good. Now, this is interesting here. Performance by intraday duration. It appears the longer we hold a stock, the worse we do. It's interesting. And it makes sense because we're day traders. We're quick scalpers. The kind of stocks we're looking for, they pump and then they dump. So it makes sense that the longer that we hold, the worse we do. Now, back to going over, I want to start going over some the days, trades view. All right, so let's go over, this is Wednesday. This was a losing day. MTP was the losing trade. So now we have to figure out why. Why was this a losing day? What happened? Did I deviate from the strategy? What exactly happened? So let's look at MTP. All the answers in the numbers. And already I can tell by looking at this. I said, this doesn't look like my trading. So something is off here immediately. This is the one. This is the 90-cent stock where okay. So this was what you call the stock. We entered it. Great entry, right? We wanted to get 1,000 shares at 90 cents. Got filled at 93. Took a partial at 99, around the dollar mark. And what ended up happening here, if I remember correctly from my memory, is there was a issue. I pressed the wrong button. So what does that mean by that? So we took the partial. We were profitable in this. We were killing it. And I accidentally clicked buy when I went to sell out. And I washed my hands and I was like, all right, we killed it. We did good. Totally forgot about it. Came back later and looked, and the thing was at 78 cents. And I was still in it, and I was blown away. I remember I was like, what? So this was what does that? You have 3 excuses, not excuses. 3 reasons that you messed up. Either you didn't stick to the strategy, which this one we did. We got out, we took a partial, and then we sold we meant to sell the remaining partial at $1.08, which would have been great. Well, we did. We sold out at $1.08, but somewhere along the way, I'm trying to see. I meant to sell 600 shares, but I accidentally bought 600 shares, and so that was a error of me being. I guess that happened from what? Where could I improve on something like this? Just be more careful. Maybe turn off auto send. I happen to be something called color deficient. I don't know if that had something to do with it. You know, if I don't read the word buy and sell on the thing, as you could see, if you look at the thing here, if you go to a chart and, you know, it has buy and sell, I have to read the word because the colors kind of can flip-flop with me because I am color deficient. So what I meant to do on that stock was sell, and I bought. And some of you guys told me you saw me make that mistake and were like, oh, no. But I meant to sell out. So something like that is just a mistake that happens. It's not really anything that I could correct other than being more careful. Maybe I could trade without Auto Trader for a while, but I don't like the idea that I need Auto Trader. Auto Send, not Auto Trader, because it automatically sends my orders, you know, and I need that because doing the chat room and doing the live stream, I need to be quick in my entries and exits. I don't have time to do confirmations because if you don't have auto send, the confirmation comes up and then you can edit and you can do all this, and this takes time. And who the heck wants to do that? And especially, you know, I'm just trying to get in and out quick and take my money. I accidentally purchased. So these things happen. It was a mistake, cost us some money. And whatever, move on. It won't happen again. In my notes, I'm going to put technical error, or it's not really a technical error. It was an error of not so much carelessness. It was just, I don't even know what you calculate that as. It's not a technical error. It technically is a technical error. But technical error is more along the lines of my Wi-Fi went out and things of that nature. Operator error, maybe, Rachel, that works. Operator error. And what's my solution? How do I stop this from happening again? Yeah, that's great. I can see I made an error, but what do I do to stop this from happening again? Got it. I'm going, and David, he's one of my prodigies. He does this. He keeps his active trader running at all times. Now your active trader, when you're trading, will show you, I just don't like how much space it takes up. But usually we don't even have this open. So my solution to this is to keep my active trader up. Now, Active Trader is this little tab right here. And what Active Trader does is it shows you, your average price, your average purchase price, how many shares you have. So for example, if I would have went in and I want to sell and I hit buy, right? I would have seen immediately on the Active Trader, oh crap, I just accidentally purchased at the peak. And I would have been able to correct and sell and get out without sustaining any losses. And by the way, this has the level 3s on here. So this is good to have anyway. I get to see what people are buying and selling on Thinkorswim. So that's how my solution to that problem. And if I can keep this Active Trader up, mistakes like that will never happen again. And for me, somebody who suffers with not that I don't suffer, let me not exaggerate. Somebody who has color deficiency, which is similar to color blindness, like I can't see the number in those little dot charts, if you know what I'm talking about. Let me see. Color blind test. Ooh. In the colorblind test, let's see. Facebook Live still up. It didn't shut down on me, did it? All right, good. I can't see none of that. I swear. I know that there's numbers or something in there. I see a 3 in here. I can see the 3. But if I can see the 3, it means you're not colorblind. Because yeah, let me see. Watch. If I see the 3, it means you are colorblind, rather. Whatever. I'm getting totally sidetracked. Okay. I can see. Okay. Yeah, this is cool. So I can see the 12 here. I can see the 3 here. Barely. I can kind of see a 29 here. Can't see anything there. Maybe a 2. I see like a cherry there. I don't really know what to tell you. 13 or 12? Nothing. 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 Something, I could kind of make out something here and here, but no numbers. Nothing. Nothing. I can kind of see a 4 here. And then like a 2 here. This one's hard. I could tell there's something there, but I can't see it. This I just see a snake. Like it looks like a snake. Anyway, I don't know why I got so sidetracked on that. Did you guys see numbers here? Like, what do you guys in the room? What do you see here? In this one, do you see anything on test 9? There's a 45 there. I swear I don't see it. So anyway, that's a weakness that I have, and I have to be aware of that. That's, by the way, that's why I love the TTM. That's why I use blue and red candles, because they don't flip flop so easily as green and red. Like it's more defined. And sometimes I actually use blue and red candles on this chart as well. Yeah, so my answer to that problem for hitting the wrong button like I did on Tuesday is I'm going to keep the Active Trader up. That way I'll always, because usually I don't see what I made until I pop over to monitor. Once I have the Active Trader up, it lets you know what you're making. It lets you see everything. So that is my solution to that problem. And it's also a level 3. It's good to monitor this to see what people are buying and selling in this brokerage. Anyway, so that's my solution to that problem. Operator error, solution. Keep Active Trader up. That's a pretty good solution to that problem. And maybe I don't want to use, because I have to kind of teach with the red and green. I don't, I could see the red and greens on the candlesticks, because the candlesticks, you can kind of tell what they are anyway. But, save. Solution, keep active trader up. Operator error, hit buy instead of sell. Solution, keep active trader up. Save. Yeah. Beautiful. All right. Let's go. Let's see the next mistake that was made. Error, sold partials, should have put stop loss. So I'm doing like self inventory here, and this is very good. So UVXY, let's see. These were options. I remember this trade. Whoa. I just want this day. $33 loss. Okay. So what I'm going to tell you what I do like. I do like that we stayed points. I do like that I exited at 33, because at this time we determined 33 is the max loss we can sustain on a stock. 32 actually. So good. I'm going to say hi. Did good on loss exit, stayed at 1:5 ratio. Okay. 5:1 ratio, win loss. 5:1 ratio. So I did good on that part. Now, let's see. Where's the exits and entries here? I bought UVXY calls and I lost. Oh, I bought at the top. Okay, so this just looks like bad chart reading. Clearly, it was overextended. Error is bad chart reading. Stock was overextended. That's it. Save. But it always could have gone higher, so who knows? The best thing that we did, believe it or not, on a losing trade, this is beautiful. Yeah, I got in at the highs, unfortunately, but who knew that those were going to be the highs on it? I mean, yes, you could see it was kind of overextended and definitely needed to pull back. And it looks like I entered on a pullback and still exited. See, that's what sucks about options. It looks like I entered and exited. Oh, no. I exited here. Yeah. Sorry. I thought I saw another triangle there. What's that square? Anyway. So also on this one, I should have got out way earlier. Could have got out earlier. It's clear to me. I'll show you earlier. The channel was clearly broken. Save. So as you can see, and I'll pop that up for you, we have a clear uptrend. and then it breaks the channel. I should have got out around here once it broke out of the channel. There was no reason to wait for it to go that low, but whatever. But it's good to recognize that, because you have to recognize your mistakes. Otherwise, you'll never learn. That's the definition of insanity, doing the same thing over and over, expecting different results. Okay. So that was that mistake. And then JD, good old JD. This one. Let's go into this one. First of all, go right into it. Out of strategy. It is not in our strategy. I'm not even on margin. Had I had been in margin and decided to go to strategy 3, because this is a strategy 3 price trade, which means you have to trade on margin and use points. But out of error, out of strategy, range, 0.90 cents to $12. Out of range. I shouldn't even been touching this. Second error. I put this on Chatter. Supposedly, it was supposed to go to the moon, 230, which it did do. It did. The next day, I think it went to 30. But we're day traders. We're not swinging right now. If I wanted to swing, I could have swung this. Yeah, exactly. Not listening to the machine. Exactly. The machine was telling me to buy TTOO, and or the artificial intelligence program, Trade Ideas, was telling me to buy TTOO. Bought JD, was bought on Chatter. Purchased on Chatter, which is a rookie mistake. I should have never done that. Purchased on Chatter. Rookie move. Never lose money on someone else, even though those people were correct and JD did end up taking off. Let's see. It hit highs at 29.39. We got in at 28. We could have made a point off of it, but to wait a whole day for a point with 90 shares, forget about it. So, but my mistake, more or less, was my exit was holding too long. So, okay, I did a stupid thing. I listened to Chatter on Chatter, rookie move. Also, JD also didn't buy TCOO, which took off, went against the scanners, as if my buddies are smarter than the scanners. Went against the scanners, just a whole bunch of dumb stuff. I remember on this one, let it run past the $32 max loss. ... And I think I left I had to leave for a little, left for a phone call. This is just a mess without using a stop loss. If you got to get up and you got to go make a stop loss, that's fine. I mean, you got to go make a phone call or go to the bathroom, that's fine. You don't have to sit and look at the computer like this. As a matter of fact, my mentor, Marvin, he does all pre-existing orders. So he goes in, he'll go to his thing, he'll say, okay, I'm going to put in an OCO order. He does a lot of option stuff too, but when he does do equity stuff, he'll put an OCO bracket in and return auto send off. And he puts in buy custom with an OCO. He'll put in his entry price. Okay, he wants to buy it at, stop. He'll buy it if it goes over $30, say. And he's trying to get $31. And he's willing to risk 33 cents. So his stop loss would be 29.33. I'm sorry, 67. So that's a 3-to-1 stop loss ratio. He confirms, he sends, and he sits back and does nothing. He doesn't care. The order executes itself. So that's one way to trade, and we'll get over that. We'll go over that in the future. But right now, the trading we're doing is more interactive. So left for phone call without using stop loss. That was just carelessness, and I will not do that anymore. Part of me thinks, it's like a small, who cares? It's 90 share. But I need to trade this. I need to make sure we're working with percentages here. It's not so much about the money. All right, so we got JD down. That was just dumb altogether. It was way out of range, out of strategy. Purchased on chatter. Didn't listen to the scanners, which said to buy TTOO, which TTOO took off to the moon. Let it run past the $32 max loss. Left on a phone call without doing a stop loss. I should smack myself for this one. Ridiculous. All right, back to trades. Let's look at trades view. Yeah, I can't wait to get rid of this computer. I don't know why it runs so slow. I just got it too. And they told me it was the best, but I gotta get a gaming computer. See, and these are things I recognize. Just like I said, there's things called technical errors. I think we're at Friday. Beautiful. Technical error. That was my fault. I kicked the wires out. I got excited and I kicked the wire out. All right, so even though BPTH was a winning trade, 145, let's look at the details. Horrible execution. Now, typically, on every other trade we've gone over, I take a partial, right? I never get all out, ever. I always sell at least 3/4 of the shares. So, even though it's a winning trade, there's an error here. One of them, technical error. I did kick out the wires. Technical, and I fixed that problem. Now the wires are actually wrapped around the back leg of the table so that can't happen anymore. Kicked out wires for secondary monitors. Kicked out wires for secondary monitors. So everything went out. My video went out. I think Facebook shut down. Everything shut down. And now I'm trying to trade, and I'm in a position, and I'm like worried about how do I go back live again, and how do I get back up? And I told people to enter, and now I disappeared. So I'm more focused on getting the thing back up. So I got in this trade, BPTH, and then I seen profit, and I got out. And that was it. That's not my strategy. My strategy is always take a partial. Unless you see a stock dumping and going to hell, you always take a partial. You want to have skin in the game. You never want to get out of a stock at $3.34 and then it goes to $8, which is what this one did. So kicked out wires. Terrible. This could have been, but there'll be other opportunities, trust me. Kicked out wires. And solution, kicked out wires, was trying to get chat room and Facebook back up. Okay, kicked out wires. Trying to fix it. Solution. Wires. fastened. Second error. 2, strategical. So remember, you have technical, you have strategical, and you have that's it. You have technical and strategical. What was that? Wasn't there a third one? No, it's just technical and strategical. Either you broke the strategy, or something like a Y happened, like a rye happened, like you kicked out the wires, the Wi-Fi went out. Strategic. And then we had operator, which is kind of along the lines of, it's not really that's more, I don't know what that would fall under technical. It's either technical or strategical. So if you have a technical error, I hit sell, but my brokerage didn't fill it. I was at the high. I'm just giving you an example here. I was at the high on Robinhood and I hit sell market. Well, boom. That's like operator error almost. That's strategical. You're not supposed to be selling market. You're supposed to be selling limit, and you can even sell limit on TD Ameritrade. This is why I love TD Ameritrade. You can hit the sell market button. Like, let's say I like it at 28.83, or let's say the mark price is 28.73. Let's say I like it at that price. If I hit sell market with the limit button here, it'll put a limit order at 28.73. So I don't literally have to go into 28.73 and put in the order. If I hit sell market, it's going to put in a limit order at 27.73. Or am I wrong about that? No, I'm like 99% sure I'm correct about that. But anyway, strategic. Yeah. Error was strategic. Didn't take partial. Just exited. So that was a mistake. If I would have had skin in the game, even if I only left 100 shares, and this went up from $3 where we got it, all the way to, knowing me, I would have sold them at the $5 mark here. But if I had the stomach to hold them until $8, just that alone, 3 to 8, that's the $500 you could have made on 100 shares if you would have left that partial in the game. And, the two kind of go together. I exited the trade so I could take care of the technical problem, but the main thing was strategic. I still should have just took the partial. So we always take a partial. I didn't take a partial. I just exited. And then there was a second thing. I didn't re-enter the trade, but guys, keep in mind, we are breakout traders, and re-entering trades, we don't really have the ability in this PD. Now, if we had 25,000 in the account, I would say go for it. But we don't really have the ability because we're trading on a cash account. In this particular instance, I was actually on margin, but in a cash account, you use your money for a trade. Either it's a win or it's not. That's what kind of sucks. Now, if you're in your PDT account and you want to get back in, you better be sure that you're getting back in. If you're wasting 2-day trades or 3-day trades on your margin account in one day, that you're in a great stock. Now, this was a great stock, and I was considering getting in. See, sometimes you think you're doing the right thing, like, well, let me wait for the pullback and then I'll get in. And it just doesn't come. And this was one of those days. Like, here's a pullback, but it fell below 5. Like, why would I get in there, on a stock that was up on no news for no reason? It was just a pump and dump. Unbelievable. Look at that chart here. So, yeah, my thing was I should have took a partial. I would have still had skin in the game. And I always take a partial. Go figure. Here's where I don't take a partial, and it ends up killing me. So, anyway, but don't think like that. Like, oh, typical me. You don't want to have that attitude about yourself, because then you'll start to notice those things actually manifest. So, for the most part, we did good here. We made a profit, and that's what's important. You're never going to make the full gain of a trade. But yeah, the error here was not taking a partial. And I guess my excuse, it's an excuse, is I had that technical error and everything went down right at the open. So save, and let's see. I think there's only one more trade this week, and that was Roku. And I was going to swing Roku. That was my initial idea, was to swing Roku over the weekend, because I'm about 90% sure this is going to break 70. But I had a good entry and a good exit. You can see I entered here, I exited there. And this week we were running, we had those 2 loss days. One, again, for that stupid reason, I hit buy instead of sell. And then the other one was JD listening to chatter instead of the AI software trade ideas. So that's pretty much it. I didn't hold this one because I wanted to add some money to the week. Now let's go back to reports view and see how we actually did. So we have to make sure that we're consistently making 10 to 20% a week. And that's where your book will come in handy here. You're going to monitor what you're doing on a weekly basis and a daily basis if you want as well. So from what I can see here, okay, can't find a pen that works in this place. All right, so on week 1, starting with $2,500, starting at 0, and we ended at $703. 1, 2, 3. It was a 4-day week. That first week, we ended at $703. So on the 2460 that we put into the account, that is 703 divided by, so everybody can do their weekly right now. You should be signed up for Trade Ideas already if you're part of the group. Not Trade Ideas. Well, yeah, you should be signed up for Trade Ideas too, but yeah, big mistake here. I look at that and that makes me sick. My losses, I let them run too much, way too much. You will never see me, at least not next week, because minds tend to forget. But you will not let those are ugly losses, and I don't like that. Now, that, believe it or not, it looks like, oh yeah, but you're all blue. Look at that. Look at all the blue. Look at all the blue. Looks like you're doing well. You're up. You're up. Those will kill you. They seem like little tiny nothings, but they'll destroy you. So we need to keep our reds like this, tiny, tiny, tiny. There's going to be red days, and there's nothing we can do about it. All right, so 703 divided by 2464. That's 2.8%. I thought we did better than that. Oh, because I'm not counting it as compounded. Compounded, it was actually 31, but I'm not going to do the compounded. I'm just going to. So it's 28%. Compounded, it was actually 30.5, but 28.5%. Week 2 is going to be probably around 5%. So now we have 2, 4, 6, 5, or 2, 4, 6, 5, 6, 4 plus 703. What's that? So let's just say 123. It's not good. Okay, I got 4%. 4.011. Okay. So, does that fall in line with our strategy? Technically, yes, because we're always going to have trades like these that just are big wins. And we're always going to have them. They're always going to come. We should be doing on average something like this a day, 193. Again, let's look at the detailed view. As of right now, our average winning trade is $88 and our average losing trade is $57. We have to drastically change those numbers big time. So right now, average daily gain and loss is $91. So we're making about $91 a day. That means we have to now drop our loss technically to about $18. That's the max we can take as a loss, which is kind of hard to do now that our account size is growing. So we're going to have to alter the strategy a little bit, but we're going to go for a 0 stop loss ratio, which means we're just going to look for breakouts. We're going to look for the point so that we don't actually have to we don't actually have to consider loss management, but if you add 28.5 plus 4.1 by 2. So we're at about 16% a week right now. That's our average. So we're doing good. We're within the 10 to 20%. We're doing good, but I want to always aim for that top number. We want to try to be at 20%. So if we can pull off 25% next week, and that's not that hard, that's 5% a day. I mean, we're trading stocks that are going up 120%, 200%. So if we can try to pull off 5% a day next week and get 25%, that'll bring our average closer to the $20 mark. Actually, we'll be at like 21% a week. And then within 3 months, we'll be at 25,000 if we can maintain this level. We recognized our mistakes today. We have them down. And I want you guys to do the same. Did you deviate from strategy? Did you listen to chatter? Did you do something far-fetched? Was it a technical error? Is it something you can fix? For example, like clicking the red button was like an operator error, as Rachel called it, and I fixed that. By now I'm going to have trader view, the active trader, so that I can see if I'm actually in a position or not when I exit. So all this stuff, this self-inventory, takes a little time. It takes 20 minutes. It took us an hour because explaining everything, but it really doesn't take much time, and it is so worth it. You want to tweak yourself to be the best trader you can be. And again, guys, get here it is here. Get this book, please. How to Trade in Stock by Jesse Livermore with commentary by Richard Smith, and make sure it's this cover. And it's basically the basis of our trading is all this one, and then another great one is Mark Douglas's where the heck is it? All right, guys. Any questions? Anything in? I'll look on Facebook and I'll look on Trader View. Any questions? Anything you want to know? Facebook. All right, so that's how you do bookkeeping then, guys. Thank you for joining. This will be saved on Facebook. Everybody enjoy your weekend. That's how you stay ahead of the curve there, is while everybody's enjoying. I can't do anything anyway. It's snowing in New York. So Might as well do a lesson on bookkeeping and how to monitor your trades. Tina got lost in combo. She asked, is it fair to do options trading when most of us shouldn't? It's a good question. I would say if you're going to do options trading, if I'm trading options and you're in the group, not on Facebook, and you want to mirror me, that's fine. You can mirror me. But we are going to be doing more classes on options. And Rachel, I want you to get the book. It's a big one, but you don't need to read the whole thing. Options as a Strategic Investment by Macmillan. Great book. This is the book that created Gary Cohen. And if you don't know who Gary Cohen is, he's the was the CEO of Goldman Sachs, then former Secretary of Treasury to President Trump, but quit. And he got there from that book. You know, when options first came out and nobody knew what it was, Gary Cohen used to hang out on Wall Street. And literally, he used to hang out on Wall Street and try to approach people to try to get rich, find a rich person and get a job. I don't know what he was doing, but he used to walk around Wall Street in a cheap suit and try to pretend like he was somebody, and he used to strike up conversation. So one day, somebody runs out and hails for a cab and says, "I'm going to LaGuardia." So Gary Cohen says, "This guy looks rich," you know. He's like, "Oh, okay, yeah, I'm going to LaGuardia too. You want to share a cab?" Anyway, they end up sharing a cab, and the guy's like, "Oh, I'm opening up this new options department," because options were just coming out at this time. And I don't know what to do. I need a head. And Gary Cohen lied. He's like, "I know everything about options. I'm the master of options." And the guy's like, "Really?" He's like, Yeah. So what ends up happening is the guy tells Gary Cohen, he says, "All right, come in on Monday." So Gary Cohen, who doesn't know nothing about options, gets this book, reads it. Oh, it was upside down. Over the weekend. Yeah, and that's a big book to read over the weekend. By the way, he's dyslexic. So he read it over the weekend and went in on Monday and killed it. Blew people away with the strategies he knew on options. I mean, options is more than just buying and selling calls and puts. There's so much to it, and it's so advanced. I agree. Is that it's not fair for me to say, you know what, I'm going to do the PDT challenge and I'm going to use options to help me get there, and you shouldn't if you're new. So yeah, we'll go and we'll get into options together. That's why, go ahead if you want to. Here's my thing. I prefer if you're new with options that you at least stick with me in the beginning and don't think you got it down and try to do it yourself, because there's things I'm looking at when I'm trading options that you're not aware of, and it's kind of hard for me to, I'm watching everything. Where is it? I'm looking at the delta, the gamma, the theta, the vega, then I'm looking at the charts, and I'm looking at, so there's so much stuff. So if we do it together, that's fine. But here's what tends to happen with options, and I've seen it a million times. People say, "Oh, dude, I bought an option on such and such, and I killed it." And then you keep trading, and you end up losing all your money. Sometimes you just get lucky. So we're going to go over options, but the most part, we're going to focus on those gappers in the morning. Stocks. So yes, you can trade options, but I'm asking if you're in the PDT challenge, if you're in my group and you have no history with it, just do it with me at first. It's going to be about 2 months for the website to go live. 2 months in a week, 2 months. 2.5 months. I don't know. The thing is expensive, man. I have I hired, because when I spoke with my mentor, he wanted me, I was going to go the cheap route, and for him to be a part of it, he's like, no, he's like, you got to hire the best people. Everything's got to be done right. And there's something called, I'm probably saying it wrong, but I think IPS it's called, that can link Webinato and the website so that it links it. So like if you sign up now, everything will be like calibrated together. So if a subscription ended, it would end on everything, the text alerts, the Webinato, the chat. Otherwise I got to do it manually. If I don't have a website and a system and a basis, how am I going to manage that manually? It would be impossible. That's all I'd be doing. So we are using expensive services and things like that. And you guys have no idea. You have no idea where this is headed, because once Marvin gets into the mix and Antonio Nasta gets a little deeper. Antonio Nasta is doing something else right now for a prop firm, so he can't really get too involved, but he's leaving. He's planning on leaving like within a month or two. And once he's deeply involved and I'm deeply involved and Marvin's deeply involved, it's going to be huge. I think it's going to be big. It's going to be big right now. Excuse me. Right now, it's, we're ticky-tacky. We're the little guys on the block. But we're going to grow. And I don't know. Anything else, guys? We got this. Everybody's got TraderView, right? If you want to upload your options on TraderView, make sure that you have you can even do a daily journal if you want on here. That's kind of cool. About your trading, what's going on. Oh, I know what the 3 parts were. It's either, okay. So there's like strategy. Either you just went against the strategy. Then there is personal. Personal is one. Like you might go along with the strategy and do everything and then just take a massive loss. And personal is a big factor. Like, what do I mean by personal? Okay, if you were out all night last night drinking and partying, I don't think you should be trading in the morning. Or even if you have insomnia or something and you can't sleep, maybe it's not the best idea to trade. Or maybe you just got in a fight with your spouse. Not the best idea to trade. You want to be yourself. When you're not you. And that's really it. But so far we are within 16.3%. And I actually think we're higher than that because that's not compounded. And that's it, guys. Enjoy your weekend. And let me end Facebook first. Enjoy your weekend, Facebook, everybody. I am out.